The Department of Labor has proposed a regulation that would require those who give investment advice to individual retirement accounts to act in the client's best interest. I'm here with Mitch Tuchman. He's the Managing Director of Rebalance IRA, an online investment advisory service. And we're going to talk about the repercussions of this regulation. Welcome, Mitch.
Thank you, Daisy. Good to see you.
Thanks for coming. Well, what is this regulation, if it succeeds? What would it mean for brokers who are giving advice in regard to individual retirement accounts?
Well, right now, most people who have a 401k or a 403b at work, at some point they roll the money out into an IRA. Once they have the money in an IRA, the money is no longer overseen by their employers, so brokers tend to come in and help people manage that money. And right now, the brokers are usually on a commission-based system, and they operate under something called a suitability standard, which means that they can sell you, as the investor, products, any kind of funds, as long as they're suitable for you. But there's a different type of money manager, like my firm, Rebalance IRA, where we operate under a fiduciary standard, and it's a higher standard where you can sue me if I don't show that I am operating under your best interest. And so the brokers are having a fit because they have to move from this standard to this standard, and they're worried that's going to become very expensive.
As you know, Mitch, this regulation was proposed before, or a similar one, by the Department of Labor. And some of the criticisms that came up then, and it was withdrawn by the DOL, but some of the criticisms that came up were that it would increase liability or regulatory costs, increase liability costs for brokers, and that it would make it impossible, some people said, to give investment advice on modest retirement plans. Do you expect any of those issues to come up again with this regulation? And do they hold any water?
Well, they'll come up and they don't hold water. So the brokers are going to scream and yell that this is going to increase their compliance costs, which is true. But it doesn't really hold any water because there's many firms like ours at Rebalance IRA and even this new movement of what are called robo-advisors that are providing great advice for low-balance accounts. It really reminds me of the auto industry in the 70s. We had gas prices going up 4 or 5 times, and we had all this pollution in the air. People were suffocating in Los Angeles, and it led to the formation of the EPA and also regulations on the automotive industry to get gas mileage up. And so they resisted and balked. And meanwhile, the Japanese retooled their whole industry for this new environment, and the rest is history. I mean, the Japanese took over the U.S. industry in terms of automotive sales because they came out with a much better product at a lower price. And the same thing is happening in our industry, and hopefully the DOL's initiatives will work.
So it's a whole new remaking of the industry.
Retooling, lower fees, using index funds, not having people on commission that have a conflict of interest in terms of selling you something that probably isn't in your best interest. Those days are over.
As you mentioned, your firm is a fiduciary. You are a registered investment advisor and act in the best interest, or required to act in the best interest of the clients.
Absolutely.
What do you see and hear from people who come to you, clients who come to you from brokerage firms?
Oh, I have well over 100 examples of that. We call them the broker refugees. One great example that comes to mind is a young woman. She's in her early 40s. Her family had a long-standing relationship with one of the well-known broker-dealers. Her father was a successful real estate developer, and he passed away. And he left her and her brothers with a bunch of stocks and bonds. And she began to try to build a relationship with this man. There was no reason to end the relationship, but she was just curious. What was she paying in fees? And she was told 1%. And then actually we got to know her a little bit, and we analyzed her portfolio, and we found that she was also paying 1.4% in the mutual fund fees that were invested in her account. She was also paid 5% load on an emerging market fund that was just put into her account. And her broker was getting a kickback of 0.25% in all those funds. And she was just incensed that the broker didn't tell her this and that she had no idea and that we could do the same job for a third the price. So we hear these stories all the time. I could rattle off 100 more, but it's just a common event that the old model with working with a broker is really broken, and the newer model, the fiduciary standard, working in the best interest of the client, is the one that's going to win the day.
Thanks for sharing your thoughts.
Thank you, Daisy.